In this video, I'm going to show you how you can grow a small account with no indicators, no bots, and no emotions. This same strategy I learned from my mentors and successful traders that's been growing small accounts and that's been successful for more than 20 plus years. So I'm going to be sharing everything and importance of how it is to take a simple trade from a 30-second time frame and implement this into your actual trading style. Like I said, no indicators, no bots, no emotions. You're going to learn the exact system that I learned from my mentors and these successful traders on how to use this in the market today. Let's get to it. ICE, the ICE method. So you probably never heard about this before, but this is something that you follow as a scalper, as a person looking to grow a small account or pass a prop firm, but you follow these exact steps to make you become a successful trader, to take trades on a 30-second time frame. Like I said, with no indicators, no bots, or no nothing. So I means internal silence. And what do I mean by internal silence? It is as simple as before you get into any trade, you must wait 60 seconds in silence. This is the most vital part in the trader's mind. Before you take a trade, literally wait 1 minute. I'm gonna give you an example. Let's say there's a closing of the candle and you're so eager to get into it because you see an engulfing candle. 90% of traders get in a candle before it closes. So if you're trading the 5 minute, if you're trading the 1 minute, but in this instance we're trading the 30 seconds, wait 60 seconds before you enter in the market. And I want you to wait 60 seconds to do exactly silence, meaning you have to be in peace, meaning before you take this trade, ask yourself, did I follow my rules? And if so, wait, and then you get in that trade. Because the moment you're waiting for 60 seconds, you basically obviously waited for 1 minute candle, which in the realm of 30 seconds, that is 2 candles. So if a trade was to be where you see a bearish candle and you see another bearish candle, that will be your sign for a sell position. And then off the 1 minute, that will give you more of an engulfing candle, which in your mindset, 1, 2 minute, 3 minute time frame, it could be your entry. C means control your risk. What I mean by control your risk is ask yourself before you get in a setup, if I lose this trade today, will I still be able to take another trade? Remember, you do not control the market, so don't stress over something you can't control. When you're growing a small account, your main focus is scalability. What is the best setup to take the most reward and less risk? And when we use the 30 seconds, this gives us that advantage where we can get in just about the perfect sniper entry with very minimal risk and high reward. Rewards from 1 to 10. For those that don't know what a 1 to 10 is, this is where actually risking $1 to make $10, or you're risking $2 to make $20. You have to ask yourself these questions when you're trading. If I was to take a 30-second entry, what could my outcome be? The key here is control your risk and understand the market conditions as well, which goes right back to I, which is internal silence. And then the next one is execution muscle. Do not rethink your entries. Focus on 2 setups. One of the setups we're going to be paying attention to is a range. The other setup we're going to be paying attention to is a trend-based setup. Now, if you're struggling and you feel like you're not entirely sure how to take these trades, like I've done, taking a $4,000 account to $40,000 here via YouTube live stream without no indicators, no bots. I was able to do that here on YouTube, and I want to show you guys exactly how to do the same thing in my community, which is Trade with Solo. This is where we go live, we go in depth, where I show you guys how I execute these trades like you're seeing in this video, more in depth with proper execution, proper entries, and proper risk in compounding your account. Well, if you want to learn more and also get one-on-one coaching with me in our community when we go live, you get everything that you need to be the best trader you can be. You will also get discounts with our Lock It Trade AI Trading Journal, which helps you figure out what plan works, what strategy, what dates, what pairs, what you lack in as far as emotions, what you're violating. It will create your trading plan for you. All you have to do is enter in your trade and it will find everything for you. Not only that, but you also get access to our entire ecosystem of everything that we offer from prop firms, from brokers, and all of this fun stuff, and free games and all of these different things. Well, if you guys really want to tune in, check that out down below, tradewithsolo.com. The link is in the description. You guys are able to get in tune with the community And other than that, hope to see you guys inside. Let's get back to it. Let's go into the live market. I want to show you what this looks like so you can see this in more detail. When we're dealing with these higher time frames, which is going to be the 4 hour and the 15 minute. 4 hour, we're looking for something like this known as structure, which is also considered supply and demand. On a 15-minute time frame, we're going to be waiting on that to break out either down or either up. Once we determine this, we now will know the direction that the market could be heading next. If we're trying to enter into the market once it broke out of this high, we obviously won't be selling it or buying it yet. We're going to wait, because what will happen if market on a 4-hour time frame gives you the range, which is equal highs that looks just like this, or equal lows that looks just like this, just as close as a range, and it broke out of the high, you then want to jump on the 15-minute as it's breaking out, and then you want to consider the 30-second time frame for your entry model. As a bank, the goal is to utilize this smaller time frame, utilize this liquidity area to stack money up so you can come back to it eventually. So if you want to consider yourself as a hedge fund or as a banker or somebody that has a lot of money that is able to control the market, I will put all of the things that I know somebody wants that is attracted to, like shrimp. We're going to use fish and shrimp for an example. Sharks, let's say sharks love shrimp. We're going to throw a bunch of shrimp in this pool for the sharks to get inside this pool. And then once they're all in there, I'm going to trap it. And then I will come back to gather all of the sharks. What we're looking for here is the exact same concept. If we have a lot of hedge funds, a lot of banks, and we have a lot of resting liquidity here, I am all for sure entering off of this play. So as a trader, the entry model is going to be that 30-second, because you can catch it really tight and you can get in an entry right about here and you can catch all this. And remind you, this is the 4-hour time frame. We looked for the range. Catching a 1 to 20, 1 to 10 is very possible. We just have to understand where and when to catch that 30-second entry. After you establish the 30 seconds is the entry model, the 4-hour, you got the range, the 15-minute, it actually broke the high or it broke the low. Now jump straight to the 30-second. The only structure you're looking for it to break through is this resting high or this resting low. Since we are going to be selling this, we're going to be looking for a setup. This is the very highest point that we've seen on a 15-minute. Now this off the 30-second play is the very first aggressive move to the downside. Essentially, you might either end up getting a double tap sometimes, or still might take a little bit of liquidity out. You then can enter once market breaks past this low. The reason why you can get in a very aggressive trade in a 30-second time frame is because everything was already done. Everything on a higher scale was already established. Everything from the 15-minute time frame was already established. There is nothing more for you to even worry about, because the 4-hour confirmed that we have a range going on. We need to mitigate this range. We need to take the liquidity out. So in order to do that, banks will take it out. But what banks will not do is just immediately go without leaving this here, especially if we see this on the 4-hour time frame. The moment we see that 4-hour time frame that broke that structure and took that liquidity and came up and grabbed everything, there is absolutely no reason and way why the market will still continue to go, especially if it mitigated all of those levels. We then use that tool as an entry model off the 30 seconds. We can then now enter off of just a breakout, stop loss just right about there, and we're in the trade. Let me give you guys a real example of how this looks in the market. Doesn't matter what you're trading, but we're going to look at US30 particularly because this is my favorite asset to trade. We have equal highs and we have a lot of equal lows, but you can even see this as liquidity. Since we see equal highs and we do see equal lows, which is looking in a diagonal way, just like that, we can now sit here and wait for what I like to once again say, that breakout of the liquidity graph. Let's go ahead and replay this. I'm actually going to do this off of 15 minutes so we can get a better visual. And as you see, market aggressively broke out of the structure. Now, the key part to this is it has to be an aggressive move. We're talking in a candle that is 2x the size. If you have the previous candle, something like this or something like this, it has to be 2 times bigger than that. Or if that is not the case, it has to be a very aggressive candle, meaning that there is a lot of buyers in this 1 hour time frame or in this 15-minute time frame, which established the volume of buyers are strong right about now. And that is exactly what we got right here. So after establishing that, get on a 30-second time frame and then start looking for our actual entry. We need to understand every single low that has been established. If you look here, we have a low. If you look here, we have a low. And if you look here, we have a low. So my idea is if we can break out of any of these lows, then I can look for a beautiful engulfing setup. So let's go ahead and play this through. Now, as you see, we immediately broke through this candle right here. Now what I'm going to do is short this, and then I'm going to have my stop loss just pips away from here. And this is where we can catch that 1 to 10, because now I know that liquidity is all here, and we also need to take this liquidity out as well. The cool thing about this as a trader is you can just hold this position, or like me as a scalper and growing a small account, I'm in, I'm out. Like every low I see, I'm out. And then if we pull back, I'm back in it again, and then I'm out. I'm back in it again, and I'm out. I'm back in it, and then I'm out, and then I'm back in it again. And as you guys clearly see, market is just dropping and dropping and dropping. So I want you guys to understand something here. ICE. This is the easiest way to understand this method. I stands for internal silence. Remember, 60 seconds before you enter into the market. C, control your risk. You have to understand, if you cannot get in the trade, don't get in the trade. If you were to take an L off this trade, understand that you still better have money in that account to trade again. And then E, execution muscle, which is what we just talked about for the actual entry model that you guys will be using for the 30 seconds to take these entries. So once again, if you guys want to get in tune with more in depth, make sure you subscribe to my YouTube channel. Make sure you tap into Trade with Solo and your boy Solo. I will see you guys next video. Peace.